So the Fed has increased interest rates quite a bit over the past few months. So the question is, how is this affecting real estate investment opportunities here in Greater Cincinnati? That's what I'm here to tell you today. Hey everybody, if you're like most of my clients, you've started to wonder how dramatically increased interest rates are affecting Greater Cincinnati investment opportunities. A lot of markets across the United States are seeing pretty dramatic price decreases and longer days on market. My name is Zach Elliott with the Invest Cincy team brokered by eXp Realty. If you're looking to buy or sell an investment property here in Greater Cincinnati, give me a call or a text today so that we can talk. Me and my team would love to work with you if you're investing in the Greater Cincinnati area. So the U.S. appears to be in a recession right now, even though the government doesn't want to call it that. And I'll admit it's strange to be in a contracting environment like economically, but we're still seeing job growth. So historically, in recessions, housing prices have always gone up, and obviously that's with the exception of 2008. So right now we've got inflation that's sitting around 8 to 8.5%. Mortgage rates are super unpredictable right now, and experts are continuing to predict that there's going to be a drop in housing prices in some markets. So let's find out what's happening here in Greater Cincinnati. The median home price for single-family homes in Greater Cincinnati fell to $260,000 in September, which is down by about $9,000 from August and down a little over $20,000 from our high back in June of $290,000. The number of single-family listings available in September was about 2,150, which is up significantly from a few months ago and about 17% higher than September of last year. As far as median days on market, those have increased to 5 days, which is consistent with what we're seeing around the country, and this is up from about 4 days on market from September of last year. So just a little bit here in Cincinnati. On the Northern Kentucky side of things, average multifamily days on market is about 10 days, which is actually way down from 23 days on market last September. And the final sales to list price, which is a major price point that I look at, is hovering right at about 98%. The final sales to list price is the ratio of what a home was originally listed for, the asking price, compared to what the final sale price actually was. So during the crazy COVID times, we were seeing final sales to list price much higher, and right now we're seeing it right down around 98%, which typically shows more of a balanced market. One thing that continues to be true is that hot homes that are prepared for the market correctly, priced appropriately, marketed well, and are in good neighborhoods are still selling pretty quickly. But a lot of homes or properties that are sitting on the market because they're overpriced happens to be because they're not well prepared, they're poorly marketed, and because of that, they're seeing some pretty serious price reductions. So what does this mean for you if you're thinking about buying or selling an investment property right now? If you're looking to sell an investment property, it's super important to first make sure your property is prepared to sell. In the investment context, that could include things like making needed repairs that would otherwise show up on an inspection, but it could also mean just making sure that the rents you're getting are reflective of the market price. So as we continue to see interest rates rise, investors are going to be a bit more discriminating, which means they aren't going to be willing to pay market price for a property that's receiving significantly lower rents. This is because investors inherently understand that there's likely a solid amount of work that goes into turning a property around, and they're just not going to pay for it on the front end to only have to turn around and stabilize the property on the back end. As far as pricing, it's super important to price your property correctly to drive a bidding war. We're not selling used cars here. We're not going for a high price so that we can negotiate down. A home is completely different, and what we're trying to do is drive an auction effect on the property. Pricing lower brings in more buyers to look at the home first online and then actually in person, and then hopefully those people make bids on the property. And that's when we can drive the price back to and hopefully above market value. If you start high, you get fewer eyeballs online, fewer showings, and then fewer offers, if any. If you're looking to buy an investment property right now, first you might be concerned about buying in a depreciating market. And while I completely understand that, let's face it, it's possible that you could lose equity after buying a home. but ask yourself this question. If you put yourself 10 years into the future and look back, would you be happy that you bought the property you are looking at right now? Likely the answer will be yes, because real estate virtually always appreciates in the long run, and a property that's a base hit today will likely have much greater returns over the long term. Now, don't hear what I'm not saying. I don't recommend that investors buy property when the numbers don't work. But with increasing interest rates, home run deals are a lot less likely to find right now. So don't pass over a deal just because the year one numbers don't look like a home run. I personally don't like to make market predictions. Right now, we all know how crazy this market is, but what I'm hoping to see is that the seller's expectations adjust according to increased interest rates. But the problem with this is that could be difficult unless we also see a number of available units on the market increase pretty significantly. So guys, if you're looking to buy or sell an investment property here in Greater Cincinnati, give me a call today so we can talk. Like I said before, me and my team would love to talk with you if you're in the Greater Cincinnati area.